Have you ever wondered why, when the economy crashes, it's the richest people who seem to come out on top? It's almost like they've got a playbook on how to thrive during an economic collapse, while the rest of us are left picking up the pieces. It sounds almost unfair, doesn't it? But here's the reality. Billionaires are profiting from the same economic crashes that leave millions struggling. In fact, the wealth gap between the ultra-rich and the rest of us has never been wider. But how are they doing it? How are billionaires capitalizing on financial turmoil, while everyday people face layoffs, rising prices, and uncertainty? Let's break it down, and I'll show you exactly how this secret wealth formula works. Economic collapse and the wealth divide. When the COVID-19 pandemic hit in 2020, the global economy went into a tailspin. Stock markets tanked, businesses shuttered, and millions lost their jobs. According to Forbes, the U.S. unemployment rate peaked at 14.8% in April 2020, the highest since the Great Depression. At the same time, the stock market experienced a huge sell-off. Yet something surprising happened. Billionaires didn't lose their wealth. In fact, many of them got richer during the pandemic. Jeff Bezos, the founder of Amazon, saw his net worth skyrocket by $70 billion during the first 6 months of the pandemic alone. By August 2020, his wealth had surged to an astounding $200 billion. How did this happen? Was it luck? Maybe, but mostly, it's because the wealthy have a strategy that most of us aren't privy to. They understand how to manipulate markets, capitalize on downturns, and leverage financial tools that the average person doesn't even know exist. The secrets billionaires use. Let's take a closer look at how these billionaires are making their money, starting with a little-known secret. They profit from recessions. Yes, you heard that right. Recessions are not a curse for everyone. For some, they are a golden opportunity. Warren Buffett, the Oracle of Omaha, is one of the most famous examples of a billionaire who has mastered the art of making money during economic downturns. Buffett himself has often said, "Be fearful when others are greedy, and greedy when others are fearful." During the 2008 financial crisis, Buffett scooped up valuable companies at bargain prices, including Goldman Sachs and General Electric. By the time the market recovered, those investments had multiplied his wealth. But how exactly does that happen? The power of stock market manipulation. Billionaires like Buffett and others have an insider's advantage. They know how to read market trends, understand when the next crash is coming, and make huge bets on what will bounce back. Stock market manipulation isn't as shady as it sounds. It's more about using their vast network, financial power, and understanding of the economy to make informed, calculated moves. Take George Soros, for example. Soros is infamous for his bet against the British pound in 1992, which earned him a $1 billion profit in just one day. Soros has mastered the art of currency speculation and uses it to make huge returns even during economic turmoil. According to Investopedia, billionaire investors like Soros are able to manipulate large-scale investments by moving billions around, forcing companies to take specific actions, and influencing the stock market to their advantage. The economic class divide. While the wealthy use these strategies to increase their wealth, the middle and lower classes don't have the same access to resources. The economic class divide is growing ever wider, and the reasons are obvious. Billionaires can buy low during a crash, investing in stocks or companies that are temporarily undervalued. Meanwhile, the average person might be stuck trying to make rent or struggling with rising costs of living. A report by Oxfam shows that the world's wealthiest people have increased their wealth by $3.9 trillion during the pandemic, while the poorest, 99% of the global population, lost a total of $5.8 trillion. This is a clear example of wealth inequality at its worst. But this is just the start. Billionaires also have access to tax loopholes and financial instruments that allow them to avoid paying the same taxes as the rest of us. According to ProPublica, the wealthiest Americans pay a fraction of the taxes that they should. In fact, some of the top billionaires in the U.S. pay an effective tax rate of less than 1%. This means they are able to keep a far higher percentage of their wealth, while the rest of the population faces higher taxes and fewer opportunities. So, what's the secret? How do billionaires continue to profit during times of economic collapse while the rest of us struggle? It's simple. They use their access to capital, information, and market influence to manipulate markets, buy undervalued assets, and avoid the same economic pitfalls that the average person faces. They have the resources to take advantage of opportunities when others are too afraid to act. They can profit from financial crashes, and in many cases, their wealth actually grows as the economy falters. While it may seem like there's nothing we can do to stop the rising wealth inequality, the first step is understanding how the system works. Once you see how billionaires profit from these crises, it's easier to realize that there are opportunities for regular people to break through as well. Maybe we can't all be Warren Buffett or Jeff Bezos, but we can start to learn how to protect our own wealth, and maybe even profit, no matter the economy.